In addition to being a huge hit for you too, pride can prevent you too from asking the right questions when you're a first-time homebuyer, or just generally don't have a lot of confidence when dealing with financial matters, especially as one as important as buying your first home and getting a mortgage to do it. So today, let's learn how to rock the answers to some of the most important, if basic, homebuyer questions, starting right now. Hey guys, welcome to Rockin' Real Estate. I'm Rob Spinoza with Guaranteed Rate. If you're a home buyer, a homeowner, or even a real estate professional looking for home finance tips, tricks, and the occasional cool guitar licks, I've got your backstage pass to a better understanding of the mortgage business. Okay, let me start by saying that when I talk to new clients, I can generally get a sense pretty quickly about the scope of their understanding of the mortgage process. So if you're a newbie, trust me, I'll know. And while some have a tremendous amount of financial knowledge and maybe even extensive experience dealing with the lending industry, let me reassure you that most Americans do not. And because many homeowners and homebuyers only complete a handful of home loan transactions in their lives, you should feel totally comfortable asking any question that comes to mind when you're dealing with your home loan professional. So again, don't let your pride get in the way, and let's get right on to your questions. Number one, what is a pre-approval and how long is it good for? A pre-approval is nothing more than a lender's analysis of your income, assets, and credit. A lender will take a uniform residential loan application, also known as an IRLA or a 1003, or you may fill out an application online. A lender will pull your credit report and they'll ask you for your financial documentation. And with this information, they'll return an initial decision that will tell you how much you can borrow and at what terms. And if you're looking to make an offer on a home, they'll provide a pre-approval letter that you can use with your offer. Generally, a pre-approval is valid for 90 days, and it can always be updated if necessary. Pre-approvals should always be free of cost or obligation. Number two, do I need 20% down? We get asked this question all the time, and the answer is an emphatic no. Most buyers can make as little as a 3 or 3.5% down payment, and eligible veterans may be able to make a 0% down payment. Jumbo buyers, on the other hand, they are limited to about 10, sometimes 15% down payment. 20% down is a gold standard, but it's not a requirement. 3, will applying for a loan hurt my credit? I've covered this one extensively in other videos, but the short answer is that you shouldn't be afraid of credit inquiries, and for most borrowers, simply making an application will not hurt your FICO scores. Number 4, should I shop multiple lenders? If you're prepared to do the analysis and comparison, and you make sure that any comparison is like to like when choices arise, then you might benefit from inquiring with more than one lender. But the truth is that most borrowers find it stressful to add more variables and decisions into an already taxing process. So if you're working with a single lending source that you trust, and you're otherwise doing your due diligence, you're setting yourself up to succeed. Number 5, what's the best type of loan? This is going to depend on a lot of factors. So to the degree that you can, don't get too wrapped up in this aspect when you begin your search. Once you begin to get more comfortable discussing your loan options, some of the mystery about loan choice will naturally begin to fall away. And I'm confident at this point a clear choice will emerge for you. Number 6, when can I lock in an interest rate? In general, you can lock a rate once you enter into a purchase contract if you're buying. And if you're refinancing, you can lock a rate once you've completed your application and been pre-approved. Number 7, how much are closing costs? This is, unfortunately, another one of those it depends answers. And the reason is that because transaction size and other variables are so vastly different across the country. Once you've begun working with a lender, it's perfectly okay to ask about how the closing will shape up. And it's perfectly okay to request a fee breakdown for the transaction. Usually lenders will provide this as a loan estimate or an LE, but even less formal fee breakdowns can be helpful at the start. Number 8, how does a lender get paid? Great question. And the answer in most cases tends to be through the loan itself. That is, you generally don't pay your lender directly. Instead, all of the lender's compensation is included in the rate that you're quoted. And again, your pre-approval should be free, and the only upfront fees you may incur are the cost of a credit report. And even there, most lenders won't charge you for that when you apply. Because everyone's situation is unique, and you may have a lot of other and even more specific questions before getting underway, get in touch if we can be of help. As you can see, some of the most common questions about getting a mortgage are also quite simple, and they may have been some of the same ones you had before watching this video. So if we can help you with the pre-approval, or any other aspect of the mortgage process that will get you the financing you need, don't hesitate to get in touch at any of the links below or by calling us directly at 415-367-5959. And if you found today's video helpful, please click on the like and subscribe buttons below, and we'll keep the hits coming.